Every year, this time of year, I get the same questions. I've been in the business since 2010, and not a single year has been any different. So I wanted to pull out my crystal ball. I wanted to show you guys what I see every single year and what we're going to expect over the next 6 months for the Denver market, because headlines are going to start changing. Since about February of this year, the headlines have started to reverse course and prices going up, bidding wars coming back, and that's all been absolutely true. And then July hits, right? So the big narrative out there is that summer is the best time to sell your house, right? We've all heard it. We all know it to be true, but it in fact is not. So this is when people start getting a little bit freaked out. They put their house on the market. It sits there for 2 weeks without much traction, and everything starts to snowball, right? You got 3 or 4 houses active in your neighborhood, and then a few more pop up, and then you start having price drops down. Well, I'm here to tell you that that is absolutely normal. But let's look at some actual numbers. We're going to start with Denver. We're going to look a little bit nationally to show you exactly what you're going to expect. So coming over here, we're in the Denver MLS. And if you get my monthly updates and you're on my email list, you'll recognize this. If you're not, there's a link in the description. You can just click on it and get my weekly email where I keep everybody updated on what the Denver market is doing. But this is a chart of closed prices. And what I'm here to tell you is that we don't just go up in a straight line, right? It seems like that, but every single year we drop in price by an average of 5 to 10%. And we can go back. So this chart that I'm showing you is back from 2009. So believe it or not, in 2009, the median price around Denver was $200,000. Okay, kind of wild to even think about. And let's start from normal-ish years. Let's go to 2012. That's really when we started to take off a bit more and feel corrected from the 2008 Great Recession, right? So in 2012, June was the peak, 245,000. Later that year, January was the low at 230. So from 245 to 230, down 15,000 in price. I mean, that's what, 7%? Next year, 2013, June was the peak. 262,000 dropped down to 249. So that's $13,000. So another, 6%-ish? Then we've got 2014, 282 down to 270, down $12,000 in price. Like, this is every single year going forward to 2016. We went from 360 down to 342. That's an $18,000 price drop, right? 2018, 410, we went all the way down to 385. So that's what? $25,000 drop in price from 410, and then last year was just wild. April 2022, we were at 600,000. We went all the way down to 520. So that was 15%. That was a big feeling correction. But it's directly indicated to houses coming on the market. And that's what's stabilizing us right now, is how many houses are coming to the market isn't a lot, right? So we're stunted in the inventory growth, even though buyers are drastically down. We're down 30 to 40% in buyers. So this close price is directly correlated to the amount of active listings on the MLS, okay? And every single year we see it. June, July, August, September are the peaks, and boom, it plummets down by January, February. Same thing, 2016. August was the peak, and boom, it plummets down January, February. And this is just a roller coaster year after year after year. So this is the norm. Now, when we go look nationally, the only difference here is that the numbers are going to be much, much smaller. So we can look here at Redfin's housing data, which is a really great resource actually for more of the broader market and what it's doing. But we can see, let's go back here. This red line that I'm showing you is the national average, which doesn't move very much. It might move 2%, where we might move 7% in our market, right? Every market is going to be different. So in 2018, the peak was June at 293,000 and dropped down by January to 273. So actually that was a $20,000 price drop. So not quite 10%, but 8%, 8.5% drop in 2019. And so we can see that cyclically every single year. So here's exactly what's going to happen, okay, is right now, a lot of people are starting to put their house on the market, and we can look at the amount of new listings coming up. This is nationwide, right? So we see about June is where it peaks out. July, we still have a lot. And these red bars that you're seeing are everybody putting their houses on the market, right? So June, July, August are tending to be the peaks. And so more people are putting their house on the market this time of year. But yet the amount of closed sales, let's take a look there, and we can see, going back, we've got May, June, July, August are the peak for closings, and then it drops down drastically. And so we end up having a bit of an imbalance. So for the rest of the year, inventory tends to keep going up in supply while closings start to drop down, okay? And then what Redfin actually does is pretty fascinating, and this is really the only chart you need to see, is tracking price drops, okay? How do you know when there's supply-demand imbalance? Is that how many people are doing price drops is all you really need to look at. And let's just look at the national scale here. So we can see the amount of times most price drops are happening is August, September, October, and then it starts to trail down, right? September is the peak in 2019, and then it trails down. So we can see in 2019, the amount of price reductions was 20%. And so 1 out of 5 homes on the market in 2019 had a price reduction to it. So what's going to happen this year? Exactly what happens every single year is that we're going to have 15 to 20% of homes get price drops. It's going to feel like stuff is coming to a head and, we might be heading for a crash. But I'm going to refer you back to what happens every single year, and that we drop in price by 5 to 7%. So if your house is potentially worth $600,000 right now, I would expect it to sell in the next few months for anywhere from $570, all the way down to maybe $550 to $560 is the norm. Now, what's interesting about this psychology is that the amount of inventory is the lowest in January, February, March. Buyers really start ramping up at about the end of February, okay? And they get beat up, right? We have multiple offer scenarios. You're having to offer 20, 30, 50 grand over asking price. And then summer hits and people start going on vacation. Activity in the market just starts to drift off a little bit. What I'm going to tell you is if you're a seller, set your expectations, okay? It's not peak time of the year. Now, this year might be totally different, right? Nothing's normal about what's been going on in real estate the last few years. So maybe we break this cycle and prices do continue to climb the rest of the year because no one is listing their house. I mean, I don't think I showed you, but this is the amount of active listings currently, so we're growing right now. June, 11,500 new units on the market. Compared to last year, though, we had about 13,000. So down, 20% in new listings to hit the market. And so every time this time of year, we see active inventory start to rise, but we've had a few blips in the radar lately that say, hey, maybe the same thing isn't going to happen. So we could go down in active inventory because people feel trapped in their houses because they have a 3% interest rate and they don't want to buy at a 7% interest rate, and they might keep their house and turn it into a rental and just save up, 3 to 5% down for their next property. Who knows? But getting back to the psychology of what happens to buyers is that they get beat up and they start exiting the market right now, okay? It happens every single year, and July is the mark. July 4th, man, everything kind of changes. And I can go back in Facebook groups I'm a part of on real estate forums and start to get all the questions of, oh gosh, here we go. Is it happening? Is this finally the year since 2008 that prices are just going to plummet? Well, last year we plummeted down 15%, and that felt pretty crappy. Maybe we go down 10% this year, right? Maybe we are more in the norm of 5 to 7%. So if you're a seller, set your expectations appropriately. If you were a buyer and stepped out of the market, what I'm going to tell you is that the next few months are your time to step back in, okay? It's going to be your time to ask for seller concessions and actually get them. It's going to be your time to get inspection items repaired, to negotiate on price a little bit, like to have a day or two to actually think if you want to own this property or not before putting an offer in on it. Now, this information on the main media headlines probably isn't going to come out for a few months. October, November is probably when you're going to start seeing, oh my gosh, real estate prices are dropping and blah, blah, blah. When in reality, it's starting now, right? You don't know you're at the peak until after the peak. And that's what my crystal ball is saying. I don't think we have a market crash. I think we have another correction, 5 to 7%. Anything north of 10% is probably a buying opportunity as long as there's not a flood of inventory hitting the market. And if you want more of my crystal ball predictions, once again, link in the description below. You can get my weekly email and stay up to date on the latest news in the Denver real estate market.